Hello everyone, Dividend Enjoyer here, and today I wanted to make a YouTube video about why I do not specifically prioritize dividends in my investing portfolio and why I have some companies that don't pay any dividends despite my channel being called Dividend Enjoyer. It seems kind of counterintuitive, right? The reason I have some companies that do not pay dividends for my own personal portfolio is simply that I think that they're amazing businesses and I wouldn't want them to pay me a dividend. And to elaborate further on that, I would say that when you're investing, it's very easy to get caught up on stocks that have very high dividends, very high payouts, and if you want something extremely stable, I think that a lot of communications companies are very good bets, like Verizon or AT&T, for example, have very high starting dividend yields, and they're great companies, but they're very, very slow, and there isn't really a lot of growth to be had there, which is why I don't want to really touch them for my own personal portfolio. And I think that they're good examples for the types of companies that I don't really want. Again, it's very easy to get caught up on that number and seeing the annual dividend amount just go up and think that that's good enough. And in some cases it is, especially in a case where you're at retirement age and you need something very stable and you just need that income stream from dividends. And I think that that's a very good way to invest, right? If you're in that position where you have a significant amount of money and you can put it into a dividend ETF and just print that cash. But for my specific position, and I think most people's positions, I think that when you're investing, you should be having a methodology to value companies and really know the business and try and find businesses that are very, very high quality and are going to increase in value in the long term. And that's kind of the most simple way to put it, but I don't think that it needs to be any more complicated than that. I think that you want to buy amazing companies, even if they pay a dividend, even if they don't, at decent prices and hold them for the long term. Now, the reason why I think that some companies should not be paying me a dividend like Amazon is because the goal of investing is to really stretch your dollar, right? And so when businesses pay a dividend, it's kind of an omission that they're unable to stretch that dollar. They have these dollars coming in and they don't know how to allocate them to increase shareholder value. So the best answer is to pay a dividend to the shareholders. I mean, that's basically money the dividend also kind of serves the purpose of keeping them on track with their budgeting and things of that nature, right? But really what a dividend is it's a company signaling to investors that they don't know what to do with this money. They have this money and they would rather pay you than invest it into something more high growth. And I think that that's the correct decision in a lot of cases for a lot of companies. But for example, Berkshire has never paid a dividend. I don't think they ever will. I think they paid one special dividend actually in like the 80s or 90s, something like that. And I think even Warren Buffett said that it was a mistake. He even said that in his annual shareholder meeting, that it's basically the company admitting that they don't know what to do with this money. They don't know how to stretch the dollar and make it worth more in the long term. So they're giving it to the shareholders. And that's not to say that dividends are bad. Obviously, with the channel name, Dividend Enjoyer, I enjoy collecting my dividends whenever I can get them. But I'm not going to make an investment decision based on just the amount of dividend that a company is paying. I think that that's a very common mistake that people make. I think that overall, the best way to invest is to invest in companies that you think will be worth more in the future and to get in at a time that you think is right for you and lucrative for you, and to have a very long-term approach to investing. Now, Amazon has never paid a dividend, and I can tell you there have been plenty of millionaires and even billionaires like Jeff Bezos that have been involved with Amazon because they've continued to grow as a business, and the business is more and more valuable pretty consistently each year. And I think that they're going to continue to grow. I think that it's an amazing business. I'm glad that they don't pay a dividend because they've shown over the history of the company that they're able to use their cash flow effectively to improve the business and to make more money. And ultimately, that's what's very valuable to me. However, Energy Transfer pays a very high dividend, and I think that it's very valuable. But I think that it makes sense for them to pay a dividend because, unlike Amazon, they're not really innovating anything. They're not really doing anything new or exciting. They're essentially a utilities company that charges a fee for moving natural gas. Same with AT&T, for example, same type of very mature company that's not really innovating in any way. They provide certain services that are very costly up front, and then they're able to collect cash from their customers, and that's just what they do. And they make a little bit of money each month, and then they're able to return a pretty significant dividend to their shareholders. And I really think there are way too many people that kind of lose track on what an investment is and what it means. It means that you're owning a piece of a company, right? So I think that it's always more valuable to invest in a company, even if it doesn't have a dividend, that's of higher quality, of better price, and overall just better than a company that is lower quality, higher price, and just pays a dividend. So I think that there are pros and cons, and I think you really have to weigh each individual company on an individual basis. If you think that it's foolish for them not to pay a dividend and you need the dividend income, then obviously you want to find companies that have a dividend and that makes sense to you. But you shouldn't be making your investment decision solely on a dividend unless that fits your investing needs. Because if you have a lot of really high growth companies, you can always trim your position somewhat and collect the cash whenever you need it, because in theory, the value would increase over time. But if you really need the dividend income, then yeah, it makes sense to have just a portfolio full of very high dividend companies or an ETF that pays a high dividend. I think that you're going about investing incorrectly if generally, obviously, it's a case-by-case basis, person by person. But I generally think it's a mistake to invest in a company just because it has a high dividend, because I've been in that situation before, and it really sucks when you're only going for that dividend income in a company that's not growing at all. The dividend barely grows at all because there's not enough cash coming in to justify a really significant increase in the dividend, and the business overall is just not very good. Like, I would not want to necessarily be involved in AT&T because I think it's a very slow, very kind of mundane business that I think it'll be around. I think it'll preserve value. But that's not really what I'm looking for in investments. I'm looking for an increase in value over time consistently with high quality. Even if I have to pay a little bit of a premium for that now, I know that it's going to grow into the future. And even if they don't pay a dividend, as long as the company is making more money and able to make more money into the future, then the company usually is going to be valued higher because it's producing more, as long as costs aren't increasing as well, obviously. But if a company is growing and it's more profitable every single year, and you think it's going to continue to be more profitable into the future, then I think that's the time when you should be investing into a business. It's not because they have X amount of dividend. And the same thing kind of goes, and this is going to be probably a separate video, but the same thing is kind of my opinion about diversification. If you can find one amazing business at a really good price and you're very confident that that business is undervalued and that you could be putting more money into it, then I think you should just be going into that one business that you think is very superior, even if, even at the risk of that business crashing. But if you're very sure about it, and you think you know what you're doing and you have a value in mind for that, buying that entire business, and the stock is trading under that market cap, then I think that it would be very unwise to not really get very greedy and go into just that one business. This is obviously my opinion. It's not financial advice. And it can be riskier because that business can go bankrupt and you could lose all the money that you put into it. I think people make the mistake that they do have to diversify just for diversification's sake. And I think that you can get inferior results when that happens, when you're kind of just trying to get a different array of businesses instead of really focusing on your area of competency and looking at businesses that you know are undervalued and you know are going to grow. Because if you're able to find some really amazing businesses that you know are going to grow into the future and you know are undervalued right now, then I think that it would be a massive mistake to pile into other businesses that are just in different sectors that you might not have as much of an area of competency about. Overall, with the dividend thing, I think it's, for me at least, it's more important to buy high quality businesses that you know are going to grow and you know are going to do very well over time and be more valuable over time than it is to buy into something simply because it has a high dividend yield or it has a dividend. And that's kind of my opinion about it. So let me know what you guys think in the comments section down below. If you guys think I'm wrong, if you guys think I'm right, if you're liking the video, please subscribe. I really appreciate it. It helps me out a lot. We're already at around 343 subscribers at the time of posting this video. And I just want to say thank you to every single one of you guys. I really appreciate it. Have a great rest of your night. Bye.